Hello, everybody, and welcome to a new PennyWise podcast from Lee Enterprises. I'm your host, Teri Barr, and happy to have you along with us today. Now, if I say the word home equity line of credit, or it's called HELOC as well, do you actually remember what that is, or have you ever used one? Well, HELOCs may be making a comeback, and we are lucky to have here to talk with us about it Holden Lewis. Holden is a mortgage and real estate expert, and he is with NerdWallet. And Holden, thank you so much for being here.
Hey, it's a pleasure.
Great, thank you. Okay, so this is really an interesting discussion as we talk about all things related to the home market and mortgages. But I guess for people who are unsure about a home equity line of credit, or again, a HELOC, what is it? How do you best describe it?
A home equity line of credit is kind of like a credit card, but it's backed by your home. So, it's a second mortgage, and and you have a credit limit, and you can charge against it and pay some or all of that balance, and then charge against it again. And you have usually it's 10 years you can do that, and then after that, then you end up having to pay the principal and interest over a certain period of time. So essentially what I always tell people, it's like a credit card, but backed by your home.
Ooh, okay. There was a while 10, 15 years ago where HELOCs were really popular. What happened?
HELOCs were super popular until the housing bust. Right around 2008, when things started going south really bad, banks really got skittish because HELOCs are second mortgages, and a second mortgage is riskier than the primary mortgage. So what a lot of lenders did is they decreased people's credit limits on their HELOCs, or they just stopped doing HELOCs, new HELOCs altogether. Wow. I mean, that's what happened to me. Was my wife and I, we had a home equity line of credit. Yeah. And we owed kind of a small amount on it. And we got a letter from the bank saying, okay, your credit limit is your current balance, and you're not going to be able to use your HELOC anymore. Please just keep paying it, but don't charge anything else to it. And so, we ended up just paying it off and closing the account. And that kind of thing happened a lot in the years after the housing bust.
Okay, that's a little frightening story. For people, though, that might be interested today in HELOCs, why do you think these are making, I guess I'm calling it a comeback? Why the interest in HELOCs again today?
They haven't quite yet made a comeback, but I think that they will. They've sort of been declining in popularity, and then they have hit kind of a floor in the last 3 quarters of, last 9 months or so. So I think that they're going to increase in popularity, and a lot of it has to do with rising mortgage rates. Just 2 months ago, you could get a 30-year fixed rate mortgage at 3% if you have really good credit. Yeah. Now it's 4%, and it's still going up.
That was fast.
Very, very quickly. I mean, I think there's a lot of people who started shopping for houses 2 months ago who might not even understand what has happened to mortgage rates.
Right.
So, but what has happened is that for a few years, people have been getting what are called cash out refinances. So let's say they have a whole lot of equity in their home, and they want some of that equity to convert it into cash to pay for some home improvements. Well, they just got a cash out refinance, which means that they borrowed more than they currently owed. They refinanced their mortgage, and when they borrowed more than they owed, they got the remainder in cash that they could then spend on those home improvements. Well, with mortgage rates rising, I think fewer people are going to get cash out refinances, because who wants to have a 3% mortgage and then do a cash out refinance for 4%? That's no, you want to keep that 3% mortgage. Right. So the solution to that is to grab that home equity to spend on, you hope, home improvements, to get a home equity line of credit.
Oh my gosh. Okay. These are tough choices too, it sounds like, with all the things fast moving. Um, do you know right now, what is the percentage with HELOCs? And is that something we're going to see go up as well?
So HELOC rates, they vary a whole lot, at the beginning, and they also vary a lot during the life of the loan. And what I mean by that is, it really depends upon your financial circumstances. But if you have excellent credit and if you're borrowing, say, less than 70% of your home's value,
Mhm.
the average rate on a HELOC, on a brand new HELOC right now, is about 4.5%. Now, keep in mind that home equity lines of credit, the interest rate varies and it changes every time the Federal Reserve changes the federal funds rate.
So it's not a
And
lock. You cannot lock that puppy down.
that's right. That's
Yeah.
right. And so, the
Okay.
Fed is expected to raise short-term rates a lot this year.
Mm.
So if you get a HELOC at, say, 4.5% today, it might be close to 6.5% by the end of the year.
Ooh,
And that's kind of one of the big risks with HELOCs.
okay. Wow. What about other ways? Is there something you can lock in? Is this worth it? I mean, what other things could people think about if they want to try to get the equity and use it in some way?
Well, if you get a HELOC, most HELOCs have something called the fixed rate option. And it's kind of hard to explain, but basically, let's say you do some kind of home renovation that costs $5,000, right?
Okay.
And so you take that money out of your HELOC, you spend it, and then what you can do is you can take that amount and you can tell the bank, okay, I want you to fix the rate on that. So it's not going to go up in the future, but it's also not going to go down. um, I want you to fix the rate on that, and then I'll pay it like a regular mortgage where I'm paying principal and interest over a certain period. And a lot of times you can choose that period. So maybe
Okay.
you can say, I want to pay that $5,000 off over the next 5 years. And so you can take advantage of that fixed rate option to, just kind of take care
Mhm.
of that discrete project and get it paid off in the time period of your choosing.
Okay. And that's part of still a HELOC, but you probably, that's it. That's that chunk that you're specifying. You can't do that with the whole life of a HELOC if you want to. Is that right?
That's right. That's
Okay.
right. I mean, it's kind of complicated. I mean, let's say you
Yeah.
have a HELOC with a $50,000 credit limit, and then you borrow 10,000 and you say, okay, I'm doing the fixed rate option on this 10,000. Well, what that does is it reduces your credit limit by that 10,000. So then you have a HELOC for 40,000, and then you can just kind of charge up on that and pay part or all of the balance and then charge up again, just kind of like a credit card and its credit limit.
Right. Oh boy. What do you think people should watch for right now? I know I keep saying, "Ooh, it's making a comeback," and I like how you're kind of saying, "Well, we have to sort of see where this is all going." So, what should we watch for?
Well, the main thing to watch for is what's happening with all sorts of interest rates.
Mm.
Mortgage rates are rising, and the Federal Reserve is going to raise short-term interest rates a whole lot this year. And so you're going to see both rates for mortgages and HELOCs go up. The rates on mortgages have already gone up a whole lot, a full percentage point in the last couple of months.
Yep.
HELOC rates haven't started going up yet, but they might go, a couple of percentage points just this year and even more in 2023. Meanwhile, mortgage rates, I don't know, they might keep rising too. So, it's really hard to make that decision. Like, should you do a cash out refinance? Should you get a HELOC? Should you just get a personal loan? These are all pretty
Yeah.
complicated things to figure out.
That's good options, I guess, if this is something you really need or have to do. But I want to ask you, if you're going to do any of those with your home, I'm assuming you want to do something smart too. Maybe you don't want to pay for your kids' college out of a HELOC or something like that.
That's right.
Yeah,
A lot of people use their home equity, or they're tempted to use their home equity
right.
to pay for things like credit card debt. They want to consolidate that high interest credit card debt and into something lower with a lower interest rate. Or maybe they want to use a HELOC to pay for college tuition. And, I understand why people want to do that. I'm not convinced of the wisdom of that, because you got to remember, when you charge something against your HELOC, you are putting your home at risk. If you can't pay that loan balance, then conceivably the lender could foreclose and take your home away. And so, if you're paying for college or paying off credit card debt with your home equity, you are swapping debt that they can't take away something from you for something where they could take your home away from you. So it's awfully risky. I think in most cases it's just not worth that risk.
Okay, I'm glad we talked about that. If there's a bottom line to all of this, Holden, what is it?
I think one of the bottom lines is use a HELOC to increase your home's value. So a HELOC is really, really great for paying for remodeling or renovations of your home. Or even, sometimes people will borrow from their HELOC to make a down payment on, say, a vacation home. And that's okay too, I guess. But really, swapping unsecured debt for secured debt against your home, I'm not convinced it's a good thing to do.
Okay. Thank you. You have walked us through what could be kind of a trepidatious topic. And I think you've helped us understand it and really look at what is best for every individual homeowner. And hopefully we've also helped them learn what might work depending on their situation too.
Awesome. Oh, let
Holden,
me ask you, have you
yeah.
ever had a HELOC? Have you ever used one?
Good question. Yes, we had a HELOC many, many years ago, probably 4 moves ago, and we did use it for some home renovations. And then when we sold that home, we felt that we were able to pay everything off and also got money on top of it because our house was better for using that HELOC to do a renovation.
Right. You're probably able to sell that house faster than you
Yes.
otherwise could have because you had done some renovations.
Yep. So we did it the right way.
Yeah.
I think Holden is giving me 1 check mark for today. Thanks, Holden.
Yeah, I don't want to be too prescriptive, like tell people, do not do this. I don't want to say that. It's just that,
Right,
like,
right.
really, really think twice.
Yeah.
So
I think what we've learned over the past many years, and especially you and I talking about back to the housing bust, that was so frightening. You hope people never forget that and just kind of use that as a background history to be careful as you move forward.
exactly. Yeah.
Oh, always good to talk with you. That's Holden Lewis. Holden is the mortgage and real estate expert at Nerd Wallet. And Holden, thank you again so much.
Hey, thank you.
And you are listening to a PennyWise podcast from Lee Enterprises. I'm Teri Barr. And again, so happy to have you along with us. All of our PennyWise podcasts are available wherever you enjoy your podcasts. Thanks, and we'll talk to you again soon.